Hi, this is Charlie back from Holiday Bobs, and I hope you're well. So this week's video is on how different people using the same technique can have different results. As always, if you do like our videos, give them a like and hit subscribe so then you know that when you get your videos coming through. So let's go through this question because it's a common thing. People often think, oh, everybody's going to have the same results if they're using the same technique. So people are using the same technique, and they'll think, oh, well, surely therefore everyone has the same results. So let's see why you can have a number of people with the same technique having completely different results. Okay, so let's go through a number of bullet points here. I'm in our trading room at the moment, so if any of the people in our trading room who are off screen at the moment want to add anything while I'm putting all these through, then by all means do so. So one reason could be markets. You could have the same technical setup, so to speak, but you could have Trader Joe and Trader Blogs. Trader Joe trades different markets to Trader Blogs, and so therefore they're going to have different results. Different time frames. I'll put TFs. TF for time frames. Again, Trader Joe might be trading off of 5-minute charts with the same technique, but Trader Blogs is trading with hourly charts or 4-hourly charts. So again, they're going to have different different results. What else could we have? It could be time of day as well. Trader Joe might be located in Australia, so time I'll put down. Trader Joe could be in Australia, so trades during day hours in Australia. Trader Blogs may be based in the northern hemisphere, so is taking different trades at different times. So again, time of day can be a factor. Okay, number 4 could be risk management. Risk. You can have two traders. One trader risks 0.5% per trade. The other one risks 2% per trade. You're going to see different results. You're going to see a bigger exaggeration on the trader who trades at 2% risk per trade, especially if he goes into drawdown, as opposed to someone who trades less risk per trade. So yeah, that's another one. And then we've got point 5 could be down to the broker itself, the broker they use. You could even have two traders trading the same techniques, taking the same trades, and have different results. How is that so? Well, I can testify this myself. I've traded on different brokers, which I still do to this day, but where I've had situations, and it happens more often than you think. Not obviously not on every trade by any stretch, but over the course of a year, it happens more often than you think. Where I've been in a situation where I've had put the same trade on two different brokers, and I've had one broker I've just got stopped out. The price has got close to my stop, and just because of the size of the spread or the way that that one broker executes, you get stopped out. The way the other one executes, you don't. Now that's a difference between a loss and a winner. Makes a big difference. If that happens just a few times over the year, that can make quite a big difference to your net P&L. So the broker that you use can have an impact as well, especially if you've got a dodgy broker. Not mention any names, so don't ask me. By all means, you can ask about brokers in the questions if you want to, and I'll try and answer. I don't know all brokers out there. I only have experience with a few brokers, but we can sometimes answer some questions with regards to brokers. Okay, what about point 6? What about point 6? What about mindset? Mindset. Maybe this is the last part here. Mindset. So you've got two traders. You've got Joe and you've got Blogs. Both of them take identical trades, but during that sequence of trades. So if I put some ticks and crosses in, so we've got the first two trades. There's Joe. There's Blogs. So there's Joe up here. There's Blogs here. and they're trading away, taking exactly the same trades. The first two trades they take are both winners. Then the third trade they take is a loser. Ooh. And then the fourth trade they take is a loser. And then the fifth trade is a lovely big winner. But poor old Blogs over here, he decides not to take the trade over there because he's just had two losers, hesitates, doesn't take the trade, so he misses out on that winner. So then he kicks himself. Then the next trade is a loser. Poor old Blogs now, he's missed out on a winner, so he's now, his experience is of having three losers in a row. He very quickly forgets that he missed out on that winner there. So he's now then hesitating again. The next winner comes along, he passes on it again. All of a sudden, you've got two traders where one has had three losers, four winners, doing quite nicely. The other one has had two winners, three losers. So two entirely different results. So again, mindset, as so often is the case, can have a part to play. So that's how we can have, there's a few different options there on how different people using the same technique can have completely different results. By all means, if you've got anything else you want to add, I've just given you a few here off the top of my head. A couple of the guys in our trading room here, they gave me risk management as an extra, but to put in there. But if you've got anything else to add in, by all means, write them down in the box this week. Take care for now.